Yeah, I think you very much have to detach the economy from what's going on in, obviously, the markets. These markets did not climb on some exuberant excitement about the economy, and now that's being pulled back. These markets climbed on euphoria and a mania, I would argue. So the real shocker, economically speaking, is that we can't find a recession yet. And I say that because I'll use Goldman as an example. I think they changed their recession number from 15 to 25%. So there's this idea that at some point we're going to have a recession, and that always happens. The question is what causes it, and if what's going on overnight looks like as bad as it's going to be in the end, we will likely have a recession that's led by the loss in asset values from the fall off in the stock market. Think of like a 2000 to 2003, where the euphoric parts of the stock market ended up being the ugliest parts of the economy 2 to 3 years later. And therefore, what it did is it drew in large unemployment in those kind of areas. And so that's back when places like San Francisco were ghost towns for jobs, back in times like 01, 02. So we don't look at this as a tie to the economy. If anything, there's conversation over the weekend how the Fed might not trust their own models. The reason why is because if you raise 500 basis points on short-term rates and you can't cause a recession, what model are you using?
Gold, we've also had a Fed here that's been so fixated on consumer price inflation, not asset price inflation. So what does the Fed do now? Because we've got a lot of market participants saying we could see a 50 basis point move in September lower. So what does the Fed do in this context?
Yeah, the Fed is trying to fight a ghost in some respects. The ghost is a massive amount of federal spending on deficit, 7% of U.S. GDP, and it's very hard to counteract a problem like that you didn't create. So the Fed has tried as much as they can. I think Jay Powell is doing all he can to try to understand that problem and counteract it with monetary policy, but it's a fiscal problem, and that fiscal problem is not ending. Let me add one more thing. Let's just theorize that Iran does go to war with Israel. I was born in 1983. In my lifetime, peace has been a common thing, and peace looks like it's leaving the stage left right now, and war is always inflationary. So to your point, Karen, at least in the interim, the CPI numbers have tamed and cooled. At the same time, though, has the fiscal spending gone away? No, that's a big problem for the Fed. And secondly, any war pressures globally become another problem for the Fed. I mean, let's just say oil woke up at $90 a barrel. The Fed has now flies in the ointment, and how are they going to deal with that pushing on prices in a way that they can't counteract oil prices? That's not their job.